After 5 years, thousands of trades, and lots of learning, here are 100 option trading tips that could have made a huge difference if I had known them sooner. And they might just do the same for you. Number one, understand what option contracts are. They are a derivative of the actual underlying stock on the stock market that give you the option, hence the name, to buy or sell shares of stock, depending on what you want to do. Number two, know the difference. When you buy a call option, you are buying the ability to buy shares. When you buy a put option, you are buying the ability to sell shares. Number three, you get paid to take on the risk when you're selling options. When you're selling call options, you take on the risk of having your shares called away. You get paid for that. When selling puts, you take on the risk of having shares put or assigned to you. You also get paid in that scenario as well. Number four, learn common terms. Get familiar with things like strike price, premium, and expiration date to master the basics of option trading. Number five, start small. Either put a small amount into your actual trading account or use a paper trading account with fake money. That way, if you lose everything, it's not that big of a deal. Number six, each option contract is made up of 100 shares of stock. So when you see the number one for quantity, think 100 shares. Number seven, do your homework. Research companies that make money, have strong revenue, and good cash flow fundamentals. Trade those companies over and over again and leave the rest behind. Number eight, follow the news, but do it in a way that blocks out a lot of the noise. A lot of news articles are trying to influence you and trade a certain way. Stay in your lane and focus on the news that actually applies to the companies that you're invested in. Number nine, look at your stock charts. Use stock charts and indicators to identify trends, breakouts, and areas of support and resistance to make better informed and better timed trades. Number 10, understand volatility. Volatility can negatively and positively impact stock price, leading to some wild price swings. Number 11, check earnings reports. Earnings can affect volatility, and volatility crush can suck you dry. Number 12, have a plan. Once you have your plan set for your trading, focus on the tasks that are going to let you execute that plan and just do it on repeat day after day. Number 13, use simple strategies. Start with the basics like buying a call option or selling a put option and scale up from there once you have a mastery of the fundamentals. 14, consider spreads. Using spreads for your trading allows you to limit risk by buying one option and selling another one to manage your downside liability. Number 15, don't chase losses. It's rare that a bad trade magically turns around and becomes good. Cut the losers when they happen and move on to the next one. Number 16, be patient. Sometimes it's better to wait for the right opportunity. And just like in dating, sometimes the best trading days are the option that you let pass you by until you get to the good ones. Number 17, only invest what you could afford to lose. Imagine that every trade you make has the possibility of going to zero, and any money you put in your trading account could be gone the next day. If you can stomach that and lose that money, you're probably okay investing it. Number 18, set stop loss orders. These types of orders removes any emotion from your trading and automatically gets you out of the position once they are hit. Number 19, diversify your risk. You don't want to put all your options or all your money in your trading account into one company. It's better to spread that around a little bit, and that way you're protected from any major downside correction in one particular stock. Number 20, never bet more than 5% of your entire account on one single trade. Going big on one or two positions rarely works out, and no one becomes a millionaire overnight. It's better to hit lots of singles long term than one home run right away. Number 21, watch your expiration date. Time eats away at option buyers. Every day that passes, the value of the option contract goes down bit by bit, but it favors option sellers. Understand how time works for your trading style. Make sure you harness it if you can. Number 22, don't rush. Your fear of missing out on a trade is just a way that the market's trying to trick you into losing more money. Don't fall for it. Take your time and make a well-executed, well-thought-out trade. Number 23, trade during market hours. When the market's open from 9:30 to 4, it gives you the most amount of volume and therefore liquidity to get in and out of your positions. Don't do after-hours trading. It's just not worth it in the long term. Number 24, be mindful of earning dates. Prices can swing wildly leading into and out of earnings. Understand this and give yourself a bit of a buffer if you are going to trade through these major economic releases. Number 25, know when you're going to exit. You should always have a defined profit or loss amount that you're willing to risk or put up with in each trade. Or you should know by the underlying stock price when it hits a certain level of X, I'm out of the trade because of Y. Number 26, stay calm. Don't let emotions drive your trading decisions. The more boring your trading strategy is overall, it's likely you're going to have better returns. Number 27, avoid stock picks. Yes, your friend may have made some money on a stock a couple weeks ago, but hey, the market moves fast and information from this morning could be irrelevant by the afternoon. So always trade your own strategy and do your own research. Number 28, keep a trading journal. Understand what went right when you have a win. Understand what went wrong when you have a loss. Document, review, and grow. Number 29, take breaks. If you had a lousy trading day or you're just kind of stressed out or not really feeling it, take the rest of the day off. Don't trade anymore. Come back the next day and hit it with a fresh perspective. Number 30, don't overreact to losses. Losses are part of trading. It's part of the journey. Take them as they come and move on. Number 31, read books on options. Find books on the strategies that you want to use and go deep. Number 32, watch educational videos. Look for videos that teach the option strategies that you want to learn and get a visual explanation of what you're trying to do. The best way for you to perfect your strategy is to pick the one that makes the most sense to you and copy someone already doing it at a high level. Number 33, join an online forum or group. It's super helpful, especially when things aren't going your way, to be able to kind of workshop ideas and things you're struggling with in a group setting versus all by yourself. Number 34, take online courses from traders that are doing what you want to do, have experience and the proof to back it up, and ultimately are at the goal or stage that you want to get to. Success leaves clues. Number 35, don't get an ego. Just because you made some money and won some trades doesn't mean you figured out the whole trading thing. Always be learning and always humble yourself, otherwise the market will do it for you. Number 36, use a discounted brokerage. Why would you want to pay more for your trades than you have to? Find the right brokerage for you at a discounted rate, of course, compared to most big banks or other trading institutions. Use that brokerage and make your trades for a fraction of the cost. Number 37, set alerts. Set alerts on your stock chart for the prices that you're tracking for specific companies. This will give you a break from looking at every chart of every minute of every day and give you a notification when a price action hits a certain movement that you're tracking. Number 38, learn to use stock candlesticks. Candlestick charts tell you way more about what's going on in the market between the buyers and sellers versus a regular old line chart. Number 39, understand chart indicators. Things like moving averages identify support and resistance. RSI can be for targeting momentum, and volume helps confirm trends. Use one that you know and understand and block out the rest. Number 40, explore option trading calculators. They will give you things like probability of profitability, potential loss scenarios, and give you the maximum win area and break-even price you need to hit for your trade to be successful. Number 41, know the market trends. Is the market rising and therefore bullish, or is it falling and therefore bearish? Try to align yourself with these because they're overarching themes of the market that can lead to major profits. Number 42, follow the major indexes. The S&P 500 and the NASDAQ or QQQ are basic indexes you need to have your eyes on every trading day. And just so you know, I've got a bunch of videos linked in the description of this video, taking a lot of these topics one level deeper to give you a better understanding of what I'm talking about here. Number 43, follow the volatility index. The VIX or VIX is the market volatility index. Understand what's high, what's low, and what's just right when it comes to overall market volatility. Number 44, it's good practice to check the CNN Fear and Greed Index. When everybody else is being fearful, it's time to get greedy and go long. When everybody else is being greedy, it's time to put the brakes on and potentially take some risk off the table. Number 45, keep your eyes out for interest rates. Interest rate hikes are bad for the market, but interest rate cuts are good, at least initially. Understand the impacts of both and keep your eyes peeled for when they happen from the US Federal Reserve or other global powerhouses. Number 46, understand implied volatility. Each stock has its own level of volatility that makes it move up or down more frequently than the other. Understand what a high volatility is relative to the historical volatility, understand where the stock currently is, and if it actually is at a higher point, lower point, or medium range on the volatility scale. Number 47, learn about the Greeks. Delta is the rate of change in a contract price for every dollar change in the underlying stock. Understand how that impacts you when you're trading option contracts. Understanding theta. Theta is time decay of an option contract. The further out you go in time when you're buying or selling an option contract, the less impact theta has. The closer to the expiration date that it comes, the more impact theta is going to have on the option contract pricing. Number 49, learn what a protective put is. This can protect your stock investments from a correction in the market and protect your downside loss. Number 50, consider covered calls. Covered calls allow you to juice up your returns by selling a call option on 100 shares of stock that you already own in your account. Understand how they work and profit from them with stocks that you already own. Number 51, learn how to roll out your options. You may want to do this to extend the life of your trade, but it can also make things a lot worse. So be careful if you do decide to roll out in time. Number 52, start with stocks that you already know. You understand them, you understand how the company works and how they make money. This is your competitive advantage that you can use to give yourself an edge in your trades. Number 53, celebrate your small wins. Acknowledge your successes no matter what. Making your first trade, that's a win. Understanding why you lost a trade, that's a win. It can't always be about money. Look in between the lines of how you're trading to get some extra nuggets. Number 54 is pretty simple. Practice makes perfect. The more reps you put in, the better you're going to get if you continue to get 1% better each time and continue to learn. Number 55, as Ted Lasso says, be curious. Never assume you understand or know everything there is to know about trading. Always be open to new information and use it to your advantage. Number 56, network with other traders. Swap stories of wins, share battle scars from your losses, and just get a general feel what other people are doing and if you can apply some of their wisdom to your own trading scenario. Number 57, figure out the best time to trade for your lifestyle. It may be early in the morning, at lunch, or near the end of a trading day. Do what works for you that you can incorporate every single day into your routine. Number 58, time is money. Automate as much as you can to speed up the process and execute your trades even faster. Number 59, increase your research efficiency. Group all of your options trading or stock trading tabs on your Google Chrome browser onto the same group. That way you can click once and open up all the browsers you want to look at. Number 60, create a list of tasks for your trading strategy. Number 1, check the market news. Number 2, check for stocks in play. Number 3, check the charts. Number 4, review the portfolio. Number 5, draft up your trades. Number 6, execute. Number 7, monitor and track. Something to this extent is going to give you the ability to repeat your strategy day after day and get better with one strategy only. Number 61, try and repeat your strategy every day. The more automated or the more flow you can follow day after day, the more reps you're going to get in, high quality reps that is, and the quicker you're going to grow in your trading journey. Number 62, review your trades. Regularly look back and see what worked and what didn't. Apply new practices based on that experience and move that much closer to your trading goals. Number 63, adapt to changes. Your strategy may start out as a winner, but the market can shift quickly. You need to be able to adapt along the way and know you're going to enter or exit the position or hedge to make sure you protect yourself and your account. Number 64, stay informed. Keep learning about changes in the market, trading platforms, companies. You need to consume information if you want to stay relevant in this game. Number 65, be open to feedback. Good traders learn from their own mistakes, but the best traders learn from the mistakes from others. Number 66, reassess your goals. Periodic checks on your trading goals are important because the reason for your trading may change over time. Make sure your trading and your mindset are aligned on why you're doing this in the first place. Number 67, think long term. This is a long-term game and very few traders make it rich in year 1 or 2. It can be year 10, 20, 30 by the time you actually make a decent chunk of profit to live off of. But the matter of the fact is, don't give up, keep the long play in mind, and you'll be fine. Number 68, limit distractions. There will always be a different or better way someone's going to tell you a way to do it. The more times you kind of stop and move to a different strategy, the more times you have to relearn everything from the beginning, and this longer learning curve can really impact your ability to make money in the market. Number 69, just be realistic. Every beginner is going to suck for a while. You're no exception to the rule. Embrace the suck and get better over time. Number 70, if you want to see your progress, zoom all the way out. Go back to your first day as a trader and understand how you felt making that first trade, how much money you won or lost, and just scale that out, compare it to where you're at now. I'm going to guarantee you're going to be way further ahead knowledge base wise. You're going to have hopefully lots more wins than losses, and you'll be way more confident in yourself as a trader. So zoom out to get the full effect of your real progress to date. Number 71, keep your emotions in check. Always try and balance your feelings and emotional state with a keen dose of logic. It will help you greatly in the long run. Number 72, use limit orders. Market orders may lead to paying more than expected. Use limit orders to set your price and avoid slippage. Number 73, monitor bid-ask spreads. Wider spreads mean less liquidity and a worse entry price for yourself. Aim for options with tight spreads to get better pricing. Number 74, understand open interest and trading volume for each option contract. Contracts with higher open interest and volume have greater liquidity and can get you a better price when you open or close the trade versus options with low liquidity or less trades being made. Number 75, avoid illiquid options. Options with low volume or no liquidity are harder to trade, have bigger bid-ask spreads, and can lead you to incurring more losses when you go to open or close a trade due to slippage. Number 76, avoid excessive fees. You pay for things like market data and commissions for each one of your trades, but you can also pay things like interest or margin lending if you're in those kind of trades where you're trading more than your account has to offer. Understand the cost implication of these things and manage them appropriately. Number 77, avoid leverage in your trading account. Leverage can amplify both the gains, the good, and the losses, the bad. A few bad trades with leverage can wipe out your entire account. Number 78, utilize position sizing, especially when you're using multi-leg combination trades like spreads or iron condors. You can scale up your potential profit with not as much risk on the table compared to an open strategy like buying a call or selling a put. By using these multi-leg strategies, these combo trades, and understanding you can size up your position to do so. Number 79, hedging against major events. Let's say you have an open position heading into an announcement like the Federal Reserve cutting an interest rate. You may want to put on a hedge or kind of reduce your exposure or your risk going into a major event that can really move the market. Number 80, understanding the effects of gamma. So gamma can work to impact the delta of an option contract, meaning that it can also impact the price of said option contract. So it's kind of a trickle down layer effect. Understand how gamma can be positive or negative and the impact and potential on the delta and the option contract pricing itself. Number 81, plan for the worst case scenario. Always give yourself a what if scenario of what could happen if this goes really, really bad. Understand what you're going to do to make that better and then just go execute the trade. Number 82, learn the seasonal patterns of the overall stock market. Yes, the Santa Claus rally is a real thing. Yes, they say sell in May and go away. Research these trends and understand if they hold true for the companies that you want to invest in. Number 83, analyze sector trends. Different sectors in the market perform and behave very differently at different times of the year. Try to tailor your options trade to the powerful times when there's upswings on the horizon historically, and stay away from these type of companies when it's historically not the best time to trade them. Number 84, stay up to date on macro trends. Things like global oil prices, economic downturns, wars across country and borders can have an impact on the market. Stay up to date and use that knowledge to your advantage. Number 85, read option flow. Look for unusual option activity from big firms and Wall Street institutions. It can sometimes front run or predict an incoming move. Number 86, understand correlation. Some stocks move in tandem with the market, others move against it. Identify who goes with the flow and who swims against the tide and act and trade accordingly. Number 87, understand the effects that dividends can have on your portfolio. Investing in a good mix of non and dividend paying companies can really juice up your returns while also limiting your risk. You probably want to have some kind of a mix in your account and not go all non-dividend depending on your risk factor. Number 88, consider credit spreads. Using credit spreads is a great way to protect your downside risk when you want to sell volatility. Number 89, evaluate iron condors for sideways markets. When you expect little movement from the market or a stock, iron condors allow you to profit from this lack of movement or lack of volatility. Number 90, experiment with different expiration dates. This will give you a feeling of how option contracts respond to shorter duration expirations, longer duration expirations like leaps, and somewhere in the middle as well as the sweet spot that I like is 30 to 45 days when you're selling volatility and selling options. Number 91, practice scaling into positions. If you make a profitable trade on day one and it continues to do well for you, slowly add to your position day after day if the trade continues to work in your favor. Scale in, then scale out. Number 92, focus on probabilities and know that nothing is guaranteed. With options trading, you're always trying to give yourself the best odds to make a winning trade. Take the numbers into your account and look at game theory and other probabilities of things happening or not happening when you're weighing your decisions. Number 93, set daily mental trading goals. ones that aren't focused solely on the profit and loss of a trade. It could be things like staying disciplined or avoiding revenge trading that gives you a small win and a boost of confidence that isn't related just to overall profit. Number 94, embrace the uncertainty. Understand that market movements can be random at times or influenced by major Wall Street players. Accept that not all trades will work out as intended and move on from the losers as quickly as you can. Number 95, review every mistake in a positive light. Every losing trade is an opportunity for growth. It's about how you choose to see it. Number 96, use the 80-20 principle. Focus on the 20% of your trade that you made the 80% of the profits on, and just keep repeating and refining that trading strategy until you get it locked in. Number 97, know where to get your tax documents from. Every trading platform has a quick and easy way for you to print out your tax documentation. Know how to access it so you're not stranded or worrying when it comes time to put your taxes in. Number 98, understand a good till canceled order versus a day order. A good till canceled order will be good indefinitely until you actually close the position or it gets filled, versus a day order will get filled in a trading day that's current, or it will just close itself off at 4 p.m. that trading day. Number 99, be prepared for early assignment. If you have a position that is in the money and not going your way, even if it's before the expiration date, be prepared to potentially have to buy or sell shares based on that position. If it's going against you, understand if you can close out the risk early, do that, but you may have to take on shares or sell shares earlier than you expected. And number 100, subscribe to my channel now to learn even more about options trading.